Good day. Welcome to this latest webinar in the series from Sygnia Asset Management. My name is Iain Anderson. I'm Head of Investments at Signia, and I'm going to be speaking to you today about an exciting development in our evolution, the next step in our growth, and that is the launch of the Sygnia Global Foreign Currency Funds. So these are three funds that we've launched in Ireland. They're registered in Dublin. And I'm going to be joined by two colleagues today, Monique Davidson and Iva Madjarova, who are going to take us through the details of the funds. But I wanted to introduce you to the funds as well as, importantly, the process in how to invest in these funds. Because they are registered offshore in a highly regulated environment in Dublin with the Central Bank of Ireland, it is a bit onerous and it is a bit different to what we are used to in South Africa. So I do want to take you through that. But first, the three funds, they follow our thematic approach, and we're very excited about this. The first is the Sygnia Fourth Industrial Revolution Global Equity Fund, which follows our theme of disruptive technologies. The second fund is the Sygnia Health Innovation Global Equity Fund, which follows the theme of aging populations. And the third fund, while not necessarily a thematic fund, it is essentially a cash fund. A lot of investors will have money sitting offshore, sitting in a bank account and maybe not earning a very high rate of interest, but they don't want to take a lot of risk with that fund, with those monies. So it's a fund where they can earn slightly higher rates of return than sitting in a bank account, but in a very safe manner. So again, as mentioned, these are funds that are registered in Dublin. So importantly, they are not for rand-based investments. These are for investors that have currency, monies in offshore currencies, in dollars, pounds, and euros. It's money that has been externalized. So we get approached by a lot of IFAs, by a lot of clients asking us for options. They've got money that they've taken offshore, but they're a bit afraid to take the next step to invest it offshore. It's a big, big world out there with literally thousands, tens of thousands of options, a lot of them very expensive, with names and companies that you're probably not that familiar with in South Africa. So we've been asked, is there ways that we can help out? And unfortunately, up until now, there's been no way for an investor to have hard currency, dollars, euros, or pounds, to invest into a Sygnia fund. But with the launch of these three funds, that is now possible. So we are very excited about that, and we hope to take you along with us on that journey. So these funds, as I mentioned, they're registered in Ireland. They are called UCITS, which stands for Undertaking for Collective Investment in Transferable Securities. So a very fancy way of defining a unit trust from a South African investor perspective. It's just a unit trust registered offshore. We've partnered with Prescient Fund Services. So again, another name that you'll be familiar with. Prescient is a local company, but they have an offshore operation. So we've partnered with them in terms of the administration of these funds. They are available for IFAs and clients that have money that they have taken offshore. And again, fees are incredibly important to us at Signia. Anyone who invests with us knows our passion about low fees. So we try to keep these fees as competitive as possible. And again, Iva and Monique will take us through that. And hopefully the fact that these are Signia funds, if you've got, even though they are available to investors all around the world, we are specifically aiming these funds at South Africans who are familiar with us and familiar with our investment approach, but who happen to have money sitting in an offshore bank account. And they just replicate the themes and the funds that we have in South Africa. It's starting with three at the moment. We are going to continue to grow it. The next one being the Signia China New Economies Fund, so a fund that we've recently launched in South Africa. We're busy registering and launching that fund in Ireland as well. So now for the technical part, and apologies if this is a bit dry and boring, but it is important. And as I said, it is a different process than what we're used to in South Africa. So it's a two-step process. And the first thing an investor must do is complete an application form. And this is an application form for Prescient. So you fill it out, and it's really to let them know who you are. You complete the form and you send it off to Prescient. We can help you with that. The form is available on our website, or you can call us on our helpline or email us. And we will send you that application, but it is available on our website. So you complete that application, you send it through to Prescient along with some documentation, which I will outline just now, and that just lets Prescient know who you are. And they will then perform the AML, the anti-money laundering, and the FICA checks on yourself. And that's just to ensure that you are who you say you are. And again, that is because it is such a highly, highly regulated environment. Once Prescient is satisfied with who you are and with the forms, they will then issue you with an investor number, which you will then use when you complete the subscription form. And again, that is available on our website, but you complete that. And in the subscription form, you also outline how much you wish to invest and which fund you wish to invest it into. And that fund also contains the bank details of Prescient, where you'll be transferring the money, which is the final step. And of course, again, this is for money in hard currency. So it's a dollar-based account, so you will need to transfer dollars into the Prescient account. And that is either for clients who have money already offshore, sitting in their offshore bank account, you just transfer it into the Prescient account. If that money is sitting in rands, again, unfortunately, the investor will need to go to their bank and take that money offshore themselves, going through the required channels with the Reserve Bank, and the bank can assist you with that. And you will need a bank account offshore, and you transfer the money into that bank account. And once it is in that bank account offshore, you can transfer that to the Prescient bank account. Unfortunately, at this stage, we are not able to accept rands, and we cannot help you necessarily with getting the money offshore, but we can point you in the right directions to the people who can help you. So the final thing is the documentation that you will need for the FICA and the AML checks with Prescient. You will need your ID document or your ID card or your driver's license or your passport. And importantly, you will need a proof of address, not more than 6 months old. And that can be in the form of a bank statement, a utility bill, or a rental or a lease agreement. And again, I know that's a bit onerous and we apologize for that, but once the process is done and Prescient know who you are, you'll be then free to invest into our funds. And we're very excited about it and we want the range to grow. So again, we started with the 3 that we're going to be speaking about today, but we will be growing it into many of the thematic funds that you are familiar with in South Africa. So with that, I'm going to hand over to Iva Madjarova. She's the head of our investment consulting division, and she's going to speak to us about the most exciting and popular of our thematic funds in South Africa, and that's the Sygnia Fourth Industrial Revolution Global Equity Fund. And that, again, that is the foreign version of that fund that we have launched in Ireland. Thank you.
Thank you for the introduction, Iain. I definitely agree that the Fourth Industrial Revolution Fund is one of the most exciting offerings out there, and we are very pleased to now be able to offer this to you as a UCITS fund. Where the Fourth Industrial Revolution Fund fits in, if you think about a well-diversified global portfolio, if you have at the core of the portfolio exposure to a broad world index, for example, and you have a number of thematic satellites, this fund fits into the disruptive technologies theme. So what is the Fourth Industrial Revolution? Well, let's look back in history at what took place in the First, Second, and Third Industrial Revolutions before we defined how we interpret the Industrial Revolution that is taking place around us right now. In the late 1700s is when the First Industrial Revolution took place, and it was all about using water and steam power to mechanize production. About 100 years later, we saw the Second Industrial Revolution take place, and that was all about the harnessing of electric power to create mass production. We saw the creation of the internal combustion engine, the aeroplane, as well as moving pictures. Then in the 1960s, it's when the Third Industrial Revolution took place. And it was all about using electronics and information technologies to automate production. We saw the creation of the PC as well as the internet, and we can all appreciate today how we cannot live without these technologies. And what is taking place right now around us is the Fourth Industrial Revolution. And this is the merging together of the physical, digital, and biological worlds. And it's happening at an exponential pace. The technologies that are driving the Fourth Industrial Revolution is artificial intelligence, robotics, the Internet of Things, 3D printing. And all of these technologies really are changing the way that we are going to live our lives. And the world has been forever changing. Looking back at 2005, if we looked at some of the world's most valuable companies in the world from a market cap perspective, we can see that back in 2005, which wasn't all that long ago, a lot of them were oil and energy companies or big conglomerates, financial services companies. In fact, out of these 6, only 1 was a technology company, Microsoft. Fast forward to today, and every single one of the top 5 most valuable companies in the world is, some type of tech company. So hopefully when we're looking at this slide in 2030 or 2035, some of the companies from the 4th Industrial Revolution Fund will make it onto this list of being some of the most valuable companies in the world that are changing the way that we use the technology or the way that we live our lives. So to tell you a little bit about the fund, what it tries to achieve from an investment objective and strategy perspective. By investing in the 4th Industrial Revolution Fund, you can expect to have exposure to companies that are optimally positioned to benefit from new technologies and innovations that have the potential to transform the global economy across a broad range of sectors. I've already mentioned some of these sectors, but they really are things such as robotics, artificial intelligence, the Internet of Things. And the stock selection universe is the S&P Kensho New Economies Composite. Now, Kensho has these 21st century sectors that I will chat to you a little bit about over the next couple of slides, but that is the starting universe of the fund. And the weighting of each company is dependent on a number of additional factors and criteria such as fundamental valuation, price and earnings momentum, liquidity. We also apply an ESG filter. From a benchmark perspective, we benchmark the fund against the S&P 500. The management fee is 84 basis points, and there is a performance fee should the fund outperform its benchmark, and the performance fee will be 20% of the outperformance, capped at 2.3%. I mentioned that the stock selection universe is these Kensho 21st century sectors. So let's chat a little bit about Kensho and what these sectors are all about. Firstly, Kensho is a big data analytics firm. It's been around since 2014, and a couple of years later, it was purchased by S&P Global. And they calculate this revolutionary range of new economies indices. They use artificial intelligence, a lot of algorithms, a lot of non-traditional type of data in order to construct their indices. So it's very much a non-traditional weighting methodology. If you look at these indices, you wouldn't have exposure to the highest exposure to the most valuable companies, for example, as you would in a market cap weighted index. So you do find some smaller names, but rest assured, every single one of these companies is listed, and it does meet liquidity requirements. And what Kensho really tried to do with all of this artificial intelligence and traditional as well as non-traditional data is they try to establish what companies and the full ecosystem around those companies are really at the forefront of the 4th Industrial Revolution. So what are these 21st century sectors? Well, there's a number of subsector indices that they calculate. And if you just look at some of the names of these subsectors on the slide, you can appreciate that these are all of the new technologies that are really driving the 4th Industrial Revolution. So in the space index, for example, you would have companies that are involved in space exploration or the mining of rare earth metals. In the robotics index, companies that are involved in all of these new types of robotics technologies. 3D printing, very exciting sector. 3D printing is no longer just limited to some small insignificant components, but it's used in dentistry, and they can even print human tissue. Virtual reality, very exciting with the rise of the metaverse. Over the next slide, if you look at clean energy becoming increasingly more important, especially now if you think about this conflict between Russia and Ukraine. There's more and more countries out there that are committing to clean energy in order to reduce their reliance on Russia. On the right-hand side, you'll see the alternative finance index, the distributed ledger index, which is all about, the distributed ledger technology, some crypto kind of, mining companies. So all of these, new types of exciting innovations that are taking place around us. And this list of subsectors is not set in stone. As the world around us changes, and there's more and more new technologies that are, driving the fourth industrial revolution, there can be new subsectors that are added from time to time. And 3 new subsectors have been added. 2 of these were added in 2021. And 1 is being added now, eligible for addition from the first quarter of 2022, so it will be added in the next rebalance. And these subsectors are digital health, smart factories, and sustainable farming. So let's dive in a little bit deeper into these 3 new subsectors. Digital health is all about companies that are focused on the remote delivery of healthcare services. So these companies could be platform developers, app developers, developers of certain devices that can make it easier for doctors to monitor their patients from home or to perform remote surgeries, but all with the ultimate goal of making healthcare easier, lower cost, and more efficient. So just to give you some examples of some of these companies, if you look at Change Healthcare and Previa Health, for example, these are technology platform companies that are connecting the patient with the practitioners and driving engagement from that point of view, and really making healthcare much easier and more accessible. The data behind these platform and apps is extremely powerful as well. And then you get companies such as ResMed. If you look at this little device on the left hand side, this device can be used to treat sleep apnea. So there's people whose muscles in the throat relax to such a point that while they're sleeping they may actually lose some oxygen. Losing oxygen can also affect the brain, and there's many serious consequences. So by using this device, it can regulate breathing. And these technological innovations are all about making these devices smaller, more accessible, easier, something that you can just, put on your bedside table and easily use to treat something very serious at home. Oscar Healthcare is a health insurance company, and again, making healthcare just accessible at a low cost to a number of people. The data, the analytics behind this app increasingly powerful, and they can actually show with data how they have very engaged users, how they can measure how they have helped people become healthier and have had a big impact on the general health of their community. And then the last example I have included is iRhythm on the right-hand side. You'll see this man wearing this little device that can be actually couriered to you. It's very small. You stick it on, you log your symptoms on an app, and it can tell your doctor whether you have an irregular heartbeat. The data extremely accurate, very easy for the doctor to diagnose exactly what may be wrong with the rhythm of your heart. And there's many technologies that are beyond, what I'm showing you here today. So these are just some of the few examples of the innovative companies that you can expect to see in that subsector index. Then you have smart factories. Smart factories is taking automation, to another level with the use of software, with, sensors that can tell whether machinery would need a service. It's not only about replacing people, but it's also about making factories that much more efficient and even providing a safer work environment for the human beings that do work in these factories. And some of the companies that you can expect to see in the subsector are companies such as Rockwell Automation, Honeywell, and ABB. And these are the companies that can provide these solutions. They can provide this machinery or these sensors or the software for companies to be able to turn more of a traditional factory and slowly transition them into a smart factory. And then the last subsector is sustainable farming. Now, this is very exciting, especially if you think about climate change, food scarcity, as well as the scarcity of resources. As the world population grows, the amount of land that can be farmed per capita is reducing. So it's becoming increasingly more important that we farm this land smarter and that we're able to actually lower agricultural waste. So the companies in this subsector are focused on exactly that. So you would have, for example, various types of devices and software where you can, monitor your farm. There would be drones that could, map out exactly which piece of land has the most fertile soil, or what little portion of the land requires water, and thereby really making it more efficient. So these companies really reduce the resource intensities. They can produce higher yields for these farmers and lower agricultural waste. So very, very exciting, especially in this market environment. And one of these companies that could provide these types of technologies is a company called Trimble. So definitely a very exciting subsector that has been added now in 2022. And it's not just these three subsectors that are focused on that are exciting. Of course, all of the other ones that I showed you all have these very innovative new technologies that are shaping the way that we live our lives. Looking at the top 10 holdings, firstly, just to remind you, this is a fund that will give you exposure to over 500 different companies. So as much as I mentioned earlier, a lot of these names, due to the non-traditional weighting methodology, may be some of the smaller names. They are US listed, they do meet minimum liquidity requirements, and you won't have an over-concentration to one single stock. You are exposed to, more than 500 different companies, and all from different subsectors. So looking at this list, a few worth a mention is drones have been doing very well. So as a subsector, drones has been the best performing subsector for the first quarter of this year. And this is largely due to the conflict that we have seen between Russia and Ukraine. So Albert System and Broaden Electronics are in the drone space, but drone usage goes beyond, the use of drones in war. For example, drones can be used for emergency services, for the delivery of packages, as well as for, farming, as I mentioned, and many other usage. And in fact, the drone subsector is set to grow, from the $22 billion market that it is today to over $100 billion market over the next couple of years. So very exciting indeed, and you can see many other very innovative and very exciting companies that you would have exposure to. And then the last thing I want to touch on is just performance. So we have seen that tech has been one of the best places to be over the last couple of years, but then towards the end of last year and the beginning of this year, we have seen tech suffer. We do understand why. And just looking at the first quarter of this year, it has been a challenging start for technology stocks, but we know why. It really is due to this pressure from high inflation that we have seen, rising interest rates, the concerns about a potential recession, this conflict that we're seeing between Russia and Ukraine, and specifically the high inflation, high bond yields, rising interest rate environment. This affects growth stocks negatively, because growth companies such as these companies in the tech sectors do have a lot of their earnings expectations that have been baked into their share prices. So the valuations of many high growth tech companies bank on profits years into the future, and high yields tend to discount the present value of future cash, and it makes them worth relatively less today. So investment theory tells us in a high interest rate environment, growth tends to underperform value, for example. So we do understand why there has been a sell-off in technology companies over the last couple of months. But looking over the long term, what we're looking at over here is the Fourth Industrial Revolution Fund measured by the ETF performance against the S&P 500 and against another innovation fund that's available out there, which is ARK. Kathy Wood's ARK Innovation Fund. And what we can clearly see is, firstly, that both of these outperformed the S&P 500 and have been over the long term. But we can see that ARK, being a lot more concentrated, has shot up a little bit faster, but then has also had a much steeper fall. The Fourth Industrial Revolution Fund, because it is well diversified across a number of companies, as well as all of these different industries, it is a lot less volatile than the ARC Innovation Fund, for example. And we can see this comfortable outperformance for many, many years against the S&P 500 other than the last couple of months. So looking at the RAND performance, we've had the RAND denominated funds since 2016, so a much longer track record. And what we can see is over the short term, this global equity fund, the Fourth Industrial Revolution Global Equity Fund, has underperformed the S&P 500 over the short term, but does outperform it over the long term. And not too different a picture, of course, when you're looking at it in dollar terms. And we have shown you what the UCITS fund has actually delivered in dollar terms over the last 3 months. Short track record, as it has only been launched since the end of 2021. We launched it in November 2021, so it doesn't have a very long-term track record. But what we can also see is these filters that we apply has tended to actually protect a bit more than the traditional South African global equity fund that we have. And over the long term, in dollar terms, again, if you look at the performance, you can see that over 3 years and since inception, it has outperformed the S&P 500. So we do understand that there has been underperformance. It's not unique just to this fund. It's broadly, tech in general has not done well over the short term. But what do we think about the future? Well, firstly, when investing in global equities, you should have a long-term time horizon. Global equities are categorized as a high risk, higher return investments over the long term. So you should have a long-term time horizon. And if you think about the long term, yes, we do expect continued volatility, especially as inflation continues to be high. And we are in this rising interest rate environment still. So this volatility is expected to continue as interest rates normalize, but thinking beyond that, these really are the technologies of the future. The impact on corporates and on our lives will be exponential. And at the end of the day, there's 2 types of people that will make money from the Fourth Industrial Revolution. And it is the very clever inventors, so the smart people working at these companies, coming up with all of these new technologies. And then the second set is the investors and the providers of capital. And lastly, because of the recent sell-off that we have seen, you could argue that it's a good time to enter this sector from a timing perspective, as it has had a little bit of a sell-off. And if you keep that long-term mindset, then we definitely think that these disruptive technologies and exposure to the Fourth Industrial Revolution Fund definitely makes sense in the context of a very well-diversified global portfolio. So with that, I want to thank you for your time, and I will now hand over to my colleague Monique Davidson, who will take us through the health innovation as well as the Global Income Fund.
Thank you, Eva, and good afternoon, everyone. My name is Monique Davidson, and I'm a product development specialist at Signia. Today, I'm going to introduce to you the Sygnia Health Innovation Global Equity Fund, as well as the Sygnia Global Income Fund, which have both been launched as part of the new UCITS range. So this is the framework that Eva introduced a bit earlier. It's this core satellite approach to investing. And this is where the healthcare fund fits in. We believe that healthcare is an excellent thematic satellite to hold within your well-diversified global portfolio, in and amongst the other satellites that you may hold, as well as a well-diversified core portfolio. We've launched a similar product as a South African unit trust in 2020, and then we also have an ETF along similar thematic lines as well, listed on the JSE. So this is where the fund fits in. And let's take a little bit of a closer look at how it's structured. So the fund primarily invests in your large listed healthcare companies that operate or are domiciled within the developed market universe. Alongside this, we have smaller investments in companies driving innovation within healthcare. So these might be companies within the biotech biotech sector, or companies using genetic engineering, using nanotechnology, using information technology to develop new products and services within healthcare. And on top of this, all companies within the fund are screened based on their environmental, social, and governance criteria. This ensures that we are investing in companies that obviously provide those really impactful healthcare products and services, but also do well from an environmental, social, and governance perspective. If we look at the top 10 holdings of the fund, you'll see many of the large and well-known healthcare companies there, such as the likes of the United Health Group, Johnson & Johnson, Pfizer, and many others. You'll also note within the top 10 holdings, we have an investment into the Global X Genomics and Biotech ETF. This gives us exposure to the genomics sub-theme within the healthcare sector, which we are quite excited about at the moment. So we may gain access to these innovative sub-themes, these innovative sectors of the healthcare theme through ETFs or through direct holdings. Then on the right-hand side of the chart, you can see the country exposure of the fund. So the fund primarily invests in US listed companies, followed by Switzerland, which also has a great or thriving healthcare sector, followed by the United Kingdom, Japan, Denmark, and a number of other smaller exposures as well. Just taking a look at a few of the companies in the portfolio. The first one probably needs no introduction. It's also in the top 10 holdings. It's the very large company Pfizer. This is a company that's been around for many years with a wide portfolio of different medicines and vaccines in various kind of targeting various aspects such as immunology, oncology, cardiology, and a number of others. But I think what they're most known for right now is obviously the development of the COVID-19 vaccine candidate that was so successful. This was done in partnership with a company called BioNTech, which is also a constituent of the healthcare fund. And these companies, were able to really quickly and effectively develop a vaccine candidate for COVID-19, assisting in kind of putting an end to the pandemic. Pfizer reported to have produced 3 billion doses of the COVID-19 vaccine and to have reached about 1.4 billion people during 2021 with their vaccine and medicines. So that's about 1 in 6 people on the globe being reached by their product. As a result, the revenue during 2021 increased really dramatically. It was up 95% to a value of $81.3 billion. The next company is a bit smaller, and you may not be familiar with them, but they really provide the backbone to the genomic revolution. So this company is called Illumina. As I mentioned, it's slightly smaller than Pfizer's, only at 47.2 billion market cap. And they provide the technology and tools for genetic sequencing. This has become a really important feature of healthcare services at the moment, enabling healthcare practitioners to diagnose more effectively and also provide new ways of treating diseases. The next company also operates within the genomics space or the genomics theme. However, this company develops gene therapies, particularly targeting rare diseases. The reason for highlighting them is that they've they've been featured in the news quite a lot recently, given that they are one of the leading manufacturers or developers of a gene therapy for hemophilia A, which is touted as being the next kind of gene therapy that is expected to be approved. This approval is expected, was expected in the first half of 2022, so really any day now, if all goes according to plan. Then taking a look at fees, the fees for this fund are exactly the same in their structure as the Sygnia Fourth Industrial Revolution Fund. So it's an 84 bp management fee with a 20% performance fee on the outperformance of the fund's benchmark. Taking a look at performance, we only have a relatively short track record for the UCITS fund itself, but as I mentioned, we do have a similar portfolio or a similar fund domiciled in South Africa. So if we just convert those returns to US dollars, we get a good proxy of what one might expect from a healthcare fund such as the one that we've launched. And as you can see, both funds over the first quarter of 2022 outperformed the Msci World, which is the benchmark. And again, over the 1 year time horizon, the South African fund outperforming the benchmark there as well. Then lastly, just having a look at the outlook for the healthcare sector. So, we do believe that the growth drivers for healthcare continue to be in place, and we're really excited for the long-term prospects of the fund. An investor in an equity fund should have a long-term time horizon in mind. So, investing in equities, you can expect some short-term volatility, but long-term, we do still believe that the growth drivers are there, and it's a really exciting place to be. Some of these growth drivers, one of perhaps the more prominent ones, is this demographic trend of aging populations. This basically means that we are seeing more and more of the global population moving into or out of the workforce and into retirement. And as this happens, they're going to be demanding more and more healthcare goods and services, driving up the demand for healthcare and increasing the need for government to invest more into the healthcare sector as well. In addition, there is expected to be a lot more innovation in the healthcare space. I've already mentioned that we're quite excited about the potential that genomics and gene therapies have for the healthcare sector, but there are a number of other exciting developments as well. So it's a really, there's going to be a lot of growth from innovation and the application of technologies such as data processing as well when applied to the healthcare sector. I've mentioned that public investment will increase as populations age. It was already quite high before the pandemic. Government expenditure in healthcare has increased during the pandemic and is expected to continue increasing in order to support the demographic trend of aging populations as well. And then lastly, in the shorter term, we should see a resuming to normality post the pandemic. So a number of processes may have been put on hold, such as elective surgeries or possibly FDA approvals. This is not unique to the healthcare sector, but as we resume to normality post the pandemic, we should see some growth and performance from that. Then there are, as I mentioned, you can expect some short-term volatility in the fund. Some of the headwinds that we've identified at the moment could possibly be kind of sentiment from COVID-19 waning. There was a lot of excitement around the development of a COVID-19 vaccine candidate, and some of that excitement is likely to taper off into 2022. Then price determination is an ongoing challenge when it comes to healthcare goods and services. Pricing products that are particularly R&D intensive in a fair and ethical manner is a constant struggle that will also cause some volatility. And then lastly, Iva touched on this, but it does feed into this portfolio as well, given that our investments into some of the more innovative and R&D focused companies, but those tend to perform less well during periods of rate rising cycles. However, given that it's quite a well-diversified healthcare portfolio, we do have exposures to your large traditional healthcare companies, which do still tend to be relatively, to remain relatively defensively positioned. And that wraps up the healthcare fund. So to end off today's webinar, I'd like to also introduce to you the Sygnia Global Income Fund. So again, just starting off with this framework, income forms a great part of a well-diversified global portfolio as well. And that's where this portfolio fits in. It's a great way or a great place to invest your excess liquidity at a slightly higher yield or expected yield than you might obtain in a bank account. So if you do not want, if you have some cash sitting offshore, you don't want to invest it in equities, which do come with some volatility, but you do want to leave your cash in a place where it's expected to earn a slightly higher yield than cash, then this might be a great portfolio for you. The portfolio, just looking at how it's structured, so we focus on short-term fixed income securities. We might gain access to these securities either through existing collective investment schemes or through direct investments into fixed income securities. The reason for this hybrid approach is that it gives the fund some great diversification as well as liquidity. The fund also may invest in cash and money market instruments or deposits. When selecting investments for the portfolio, we do have an environmental, social and governance approach. So where we use other collective investment schemes, we ensure that these funds also apply an ESG approach. And then where we invest directly, we look at a universe of green, sustainable and sustainability linked bonds. So you're getting instruments that also have an environmental and social aspect to them as well. The fund invests in very high quality assets. So I mentioned that we're looking at ESG type assets, which does reduce the risk that may arise due to environmental or governance concerns. So we take a bit of that risk out. And then also we look at investment grade instruments, which again, less risky than some of the high yield assets that are available. The fund is based, it's based in USD, but we do have some exposure to other currencies as well. So you do get quite a nice diversified currency basket when investing in this portfolio. Some of the other currencies include the euro, the Japanese yen, and the British pound. If we take a look at the top 10 holdings of the fund, you can see some of the currency allocations there, as well as the investments into collective investment schemes. The investment schemes that we use are predominantly ETFs, so very liquid and add nicely to the diversification of the portfolio. Not shown in the top 10 holdings because it tends to be kind of smaller allocations as a percentage of the fund, but we do have some direct bond investments. As I mentioned, we focus on a universe of green, sustainable and sustainability linked assets. So just to give you some sort of example of those, we include Apple's green bond, which enables Apple to produce their products in a way that is less carbon intensive, less water intensive, and also the likes of something like Toyota's green bond, which kind of facilitates the development of hybrid cars, which are more environmentally friendly. On the right-hand side, you can see the currency breakdown of the fund. As I mentioned, predominantly USD based, but with some allocations to the British pound, the euro and the yen as well. Just looking at fees, this fund is structured slightly differently. The fee is a flat 45 basis points and no performance fee is attached. Then having a look at performance. And when we look at performance, we must bear in mind that the first quarter of 2022 was actually the worst quarterly performance for global bonds that we've seen over the last 40 years. However, despite this performance, this has had a relatively muted impact on this particular fund, and that is because of the fund's construction, in that it's focused on short-term instruments that are of a high quality. So the fund has underperformed its benchmark over the first quarter of 2022, and I've included, again, because we have a short track record of this fund, I've included a similar portfolio that we run as a segregated mandate, just for a bit of comparison, to give you an indication of what performance may have looked like over the past year. So as you can see, over the first 3 months, these two portfolios performed very similarly. And then over a 1-year time horizon, not much change beyond that 1.7 drop over the first 3 months of 2022. So really a lot of the underperformance came from this first quarter, which, as we know, has been a difficult one for fixed income instruments. However, yields have picked up as a result, and the yield in this fund is currently over 1.7%. Then lastly, wrapping up with the outlook for the fund and for the asset class. So I've mentioned a few times the performance of Q1 2022 when it comes to fixed income. And this poor performance was a result of investors expecting central banks to hike rates quite aggressively to curb the sort of runaway inflation that we're seeing. So investors have priced in quite aggressive rate hikes. We saw the US Central Bank implement its first half-point interest rate hike just last week, the first half-point that we've seen since 2000. So they're starting to embark on these more aggressive rate hikes and have signaled similar increases for the next few meetings. But given that the rate hikes are expected to curb inflation, what we are seeing is that inflation has already started to come under some sort of control. We're seeing that price pressure start to decelerate. And so although the bond market is pricing in a lot of rate hikes over the next year, 2 years, we may see that not all of those hikes are potentially necessary, given that those price pressures are already coming under control. So if that is the case, and if markets remain fairly stable or yields maybe drop from here, then we could see fixed income earn really strong expected returns over the next few years. However, if yields continue to increase, we could see investors lose, we could see the fund have capital losses. Although if you look at the graph on the right-hand side, we can see that during periods of rate rising cycles, actually your shorter term fixed income instruments do hold up relatively well comparison to other fixed income corners of the yield curve. And so although there's a potential for further rate increases, this fund is more conservatively positioned than most fixed income portfolios. And we may also see that yields have been elevated a little bit too aggressively. And if that comes under control, you could see some great performance for investors if that scenario were to play out. And that wraps up the presentation part of today's webinar. Thank you so much for sticking with us and listening in. I'm now going to hand back over to Iain to facilitate the Q&A part of today's webinar. Thank you so much. Cheers.
Okay, thank you very much, Nikki. Thank you, Eva. That was a great introduction. Hopefully everybody has a good understanding of these 3 funds that we're launching. We're very excited about it. It's a great step in the growth of Signia. and in our evolution. And as we mentioned, it's just the start. So eventually we will be extending the entire range of our thematic funds in South Africa. So keep an eye out for that. We'll be starting with the China Fund, the China New Economies Fund. That'll be hopefully the next one to launch in the UK, as well as a future tech fund. So again, just keep an eye in your inbox for that. I'm going to go take some questions now, and I'll hand them off to either Iva or Nikki, depending on the context of it. So you can type those into the Q&A box. But before I get to that, I just want to mention a very exciting development, another development at Signia, the long-awaited launch of our new online portal. So Sygnia Online is scheduled to go live on the 30th of May. And I know some of you have been waiting a number of years for this announcement. So if you haven't received any communication on that yet, keep an eye on your inbox. We will be communicating quite a bit over the next few weeks. So the new system goes live and there's tremendous amount of benefit for it. We're very excited about it. It's all online. There's an incredible amount of flexibility, but there are a number of important dates involved around that. And the most important being there will be a freeze on transactions on the existing Alchemy portal. And that starts from the 19th of May to the 29th of May, right before the go live date. So any instructions that you get in before 2 o'clock on the 19th of May will be acted upon, but then we will have a freeze while we switch over to the new system for those few days, and the system will go live on the 30th of May. And Alchemy, the existing system that you've been using for the last 10 years or so, will switch off at that point as well. So it is going to be quite a big change. We're very excited about it. We're going to be sending out lots of communication on it, and we will be hosting 3 webinars between now and the launch date. So again, just keep an eye on your inbox for that information, or you can contact us and we'll send that to you. But lots of, it'll be very interesting content in those webinars in order to how to use the new system. So very, very excited about that. And then if I start, there's a lot of questions coming through, so we will try to get to them all. Thank you very much. The first one is Gail. She asks, what if we have pounds sterling in the UK and wish to invest? So that's a great question. That's exactly what these funds are about. The prescient bank account that you will be transferring your funds into is a US dollar account, but that's not a problem. You just would instruct your UK bank the details of the bank account that you want to transfer to. They will need to do a currency conversion, but that's a very simple thing for them to do, and they will take care of that for you. So your pounds are very much able to invest into this fund. It'll just need to be converted to US dollars first. Then Tion asks, will these funds be made available on offshore platforms like INN8, Offshore, Momentum Wealth International, and Alan Gray Offshore? Also a great question. Currently not available on those platforms right now, but we're definitely very much working on that at the moment. And again, just keep an eye out for announcements around that. And we'll just to make it much more available and easier to access. Mervyn then asks, this will be a question for Iva, is there a performance fee charged for the Fourth Industrial Revolution ETF, like for the equivalent UCITS fund? Okay, so I think it's just asking about performance fees on the domestic South African unit trust, the South African ETF, and the offshore ETF. Iva, will you take that?
Sure. Thanks for your question. Great question. The South African ETF is not trying to outperform a benchmark. It is purely a passive instrument, and its benchmark is the S&P Kensho New Economies Composite. Therefore, in the ETF, there will not be any performance fee, as all we're trying to achieve is actually track the index as close as possible. In the UCITS fund, there is a performance fee due to the fact that the fund is trying to outperform the S&P 500. So whenever it does outperform the S&P 500, which is its benchmark, that's when a performance fee will be payable.
Okay, thank you, Iva. And I'll ask you another question while we're on that theme. Alizé asks, does the Fourth Industrial Revolution Fund invest in Bitcoin or cryptocurrency? So very timely, apt question.
Another great question that we get quite often, especially when we're speaking about new innovations. And the answer is that there's no direct exposure to cryptocurrencies, be it Bitcoin or any other cryptocurrency. Every single constituent is actually a company. So all 500 plus of these constituents are equities. However, there may be some indirect exposure. Some companies may hold some cryptocurrencies on their balance sheet. And also, if you think about those subsectors that I showed you, one of them was the alternative finance, the other one was the distributed ledger subsector index. Companies in those subsectors are involved in that type of technology. They are involved in the whole, distributed ledger network. There might be some crypto mining companies. However, they are all US listed equities. So no direct exposure to the actual cryptocurrencies.
Great, thank you, Iva. Okay, Nikki, a question from Megan for you on the healthcare fund. She asks, how similar is the healthcare fund to the Sygnia Health Innovation Unit Trust and the Signia Itrix Selective Healthcare 150 ETF?
Sure. So the UCITS fund is actually quite similar to the South African Unit Trust. It's obviously based in USD, whereas the Unit Trust is based in South African rands. But in terms of the holdings and the modeling, those two funds are very similar and kind of based on a similar strategy. Whereas the ETF, this tracks the Selective Healthcare 150 Index. So this is an index tracking product. We don't have any influence on what that index is. We merely track it. And so that fund structure is slightly different to the other two, although there will be some overlap and both obviously within the same theme.
Okay, thank you, Nikki. Andre asks a question that I cannot answer, but I will read the question out. Andre asks, for estate tax purposes, will these funds, meaning these foreign currency funds, will these funds trigger foreign estate tax or only RSA estate tax? I'm afraid I don't have an answer to that. I think we will, obviously it'll be very dependent on individual circumstances there, but Andre, I'm sure I can get your details here, but I can try and investigate that and come back to you on that one. Kubus then asks a few questions, so we'll go through them, and I think they all have a similar answer. Kubus asks, good morning, on which website will one be able to view your Sygnia offshore funds? That's a great question. Will it be available to view on one's current Alchemy platform, which we're changing over on the 30th of May, once the funds have been invested? And unfortunately, at this point in time, the answer is no. You will not be able to see your investment in these funds on the Sygnia platform. It will only be on the Prescient platform. So when you sign up for these funds as a client of Prescient, you will get access to their platform or their portal, and you'll be able to view your funds there. When we switch over to the Sygnia Online system, in the first release that's going out, it's the same story. Unfortunately, you will not be able to see your investment in the funds, but that's very much in the development for version 2 of the new online platform. That'll be coming very shortly thereafter in terms of the launch. So you will be able to view your offshore funds on our new Sygnia online platform at some point in the future. And then Kobus asks another question saying, will Signia issue a yearly tax certificate for South African tax residents invested in these offshore funds? So again, an excellent question, but again, that's something that Prescient Offshore will be issuing you. So that's not something Signia is going to issue you with. It's going to be Prescient will issue with that tax certificate. And then I think the final question from Kobus, again, all excellent questions. So I used to saying that applies to the Sygnia Global Income Fund. Yes, same thing. So Prescient will issue that tax certificate. And then a very, very interesting question. I'm going to give it to Eva. Eva, get ready. John asks, why would the Sygnia 4th IR Fund or ETF be better than the ARC Innovation ETF? So ARC is the Cathy Wood fund that's gained a lot of prominence over the last few years. Tremendous amount of assets flowing into that fund. Just asking why the Sygnia 4th IR Fund would be better than the ARC Innovation Fund. Eva?
Great question. Both of them will give you exposure to innovative type of stocks. However, Cathy Wood's ARC Innovation Fund is a lot more concentrated. It holds anywhere between 35 and 55 different holdings, whereas the 4th Industrial Revolution Fund will give you exposure to over 500 different companies. So by way of design, our fund is a lot more diversified, and with higher diversification, it ultimately reduces the risk. So from a, choppiness perspective or risk perspective, you can expect the ARC Innovation Fund to be a lot more volatile than the 4th Industrial Revolution Fund. And ours does give you exposure to many, many different types of subsectors, as I try to show you in my presentation.
Great, thank you, Eva. Okay, next there's a question from Graham, and this is going to be for Nikki. And I think you covered it, but I think maybe just expand on it slightly, saying in an environment where the expectation is for interest rates to continue rising, which is what we are expecting certainly for the next year, year and a half, how much risk is there that the treasuries held in the Global Income Fund might result in capital losses? Nikki?
Yeah, so yeah, we did kind of briefly touch on this in the outlook, but basically, you know, these interest rate rises are in order to curb kind of this runaway inflation, and the bond market has priced in a lot of aggressive hikes already, and so if these price pressures come into some kind of control, we might not need to see as many hikes as have been already priced in. So if that's the case, you know, investors might be able to avoid capital losses at this point. The fund did experience some capital losses when, you know, during the first quarter because of the bond market's expectations. But yeah, it remains a risk to the fund, but we kind of have a slightly more positive outlook for the rest of the year.
Great, thank you, Nikki. Ruark then asked a question, will the Fourth IR and the Health Innovation Fund also have OSE exposure like the local funds? And that's an excellent question. So that refers to our investment in the Oxford Sciences Enterprise Fund. And at the moment, no, they are not going to have any exposure to that, but it's a great question. It's very difficult to find shares to invest in OSI and OSE, but should some come available, we would certainly look to make it available into these funds. That's a great question. Then Neil asks, will you launch a WW fund, so a worldwide fund to act as the core in an offshore portfolio? So would we launch an offshore global fund to act as a core within an offshore portfolio? And that's a great question too. I wouldn't say no, we don't have any plans at this point in time. Right now, it's just thematic funds that we're looking to launch, but would we look to launch an MSCI World or an S&P 500 type fund in the global market? And I think we certainly would. It's obviously a game of costs offshore, and there's plenty of people who do it incredibly cheaply, but we think we can do things quite efficiently as well. So I wouldn't say no to that, but certainly nothing in the immediate pipeline right now. And then Duncan asks, is the Fourth IR fund connected to the existing local one? And I'll answer that one, Eva, but it's connected in the sense only that it tracks the same index that's in the two funds. So it's not a feeder fund, they're not commingled in any way, but they are very similar funds. We would expect the performance, it's not going to be exact. There are going to be slight differences in the funds, but the performance would track each other quite closely. And then I'm afraid I cannot answer this question, Ben. It's a great question. Investment in any of these three funds subject to inheritance tax in Ireland. Again, I can try and get some detail on that, and if I can get something, I will get something through to you, but I'm afraid I don't know that. I think we've answered the next one where Vili is asking the difference between, well, I guess Vili is asking, what's the difference between the Sygnia Fourth IR Rand-based fund and the USD-based fund? So again, it's just jurisdiction where the two funds are. One, the offshore fund can accept USD. So that fund is specifically for investors who have money externalized from South Africa. You cannot take money that you have offshore and invest it into our domestic fund, and likewise you can't take rands and invest it into this offshore fund. It has to be converted into USD. So that is the main difference. Otherwise, the two funds do look very similar, but they're not linked in any way. They're not commingled in any way. And the benefit is just if you have externalized money, this is a way you can invest in these very exciting thematic funds that you're familiar with in South Africa. And then A. Marer asks, do you need an offshore bank account to invest in these funds? Yes, you do. So that does mean if you want to take money offshore to invest in these funds, you want to externalize that funds, you do need to have a bank account offshore that you're transferring that money to. Prescient cannot accept the Rand-based investment into that fund. It needs to be from a USD or from a foreign currency bank account converted to USD. Duncan again asking, would the existing Fourth IR be recovering soon? I don't know if you did cover that, Eva, but maybe you just want to touch on that a little bit. There's been some criticism of it with people asking if it's time to exit and cut losses. Certainly, we've taken some pain on it. Eva, I will get you to answer it, but we do believe a lot of the risk is currently priced into that fund. So it's dependent on individual circumstances whether you should be cutting losses, but we think we're closer to the bottom than further losses in this. But Eva?
Yeah, spot on. Thanks, Iain. And I think it's not just the fourth IR fund, it's all, technology growth types of stocks, which I explained have a lot to do with the current rising interest rate environment that we find ourselves in. And if we're thinking about the long-term story of these types of innovations that are taking place around us, it definitely does make sense to have exposure to this theme in a broadly diversified global portfolio. So the long-term story still stands. Yes, we do expect continued volatility, but as Iain mentioned, we do think that, potentially we have seen some of the worst already from a performance perspective.
Great, thank you, Eva. Okay, I think hopefully we're getting, lots of great questions. I think we've covered a lot of it, but here's an interesting one from Christina saying, is there a ZAR-based global investment fund for South Africans who cannot invest offshore? So this is people who are not able, maybe you don't have a bank account, or maybe you're not, for whatever reason, able to externalize any money. And yes, Signia certainly has plenty of ZAR-based global investment funds options, including the Sygnia International Flexible Fund of Funds. That's a 100% offshore fund that invests in a balance of equities, bonds, and cash. There's the Sygnia Skeleton Worldwide Flexible Fund, which again, it's not an entirely 100% offshore fund, but it's a large portion of that fund is invested offshore. So it's not a Reg 28 fund, a large portion offshore. And then there's the Sygnia Skeleton International Equity Fund of Funds, which is a 100% equity fund and 100% offshore fund. And then, of course, we have a large portion of our ETFs in South Africa are dollar-based investments, the S&P 500, our Japan fund, our Europe ETF, the FTSE 100 ETF. So we do have a number of options. If you look at our website, I think you will find hopefully something that will suit you there. Are the fourth IR and health UCITS funds listed in London or Ireland? They are listed in Ireland at the moment. I'm not sure what you're referring to there, if that's just in terms of platforms, but they're registered in Ireland. So that is where they're listed at the moment. With the lowest fees as a key Signia objective, yes. Would you recommend the fourth IR ETF in preference to the local fourth IR unit trust? And I guess there it depends on individual circumstances. Fees are certainly incredibly important to us, and the unit trust does have a performance-based element to it. So it depends on what you are comfortable with paying. And that's, again, performance fees are something investors have to make a decision on up front. What sort of outcomes do you expect to come in the future, and what fees are you prepared to pay around that for those various outcomes? And then after, when the future becomes known and you see what fees you're paying, you have to be comfortable with that you made that decision at the beginning. So again, a very individual decision. And I would look at individual preferences before I would make that decision. Just see, there's lots of tax questions. So again, I cannot answer them, but I will try and get information. And if you leave your name on this Q&A, or you can write into us, if we get some information on that that's appropriate for your circumstances, we will share that with you. Okay, I think that's it for the end of the questions. Yeah, I think that's great. Thank you very much for joining us this morning. We've gone a little bit over time, but thank you for all your questions. Thank you for your interest. And please, again, look out for the launch of the new Signia online portal, 30th of May. Lots of webinars, lots of information showcasing those two. Showcasing the benefits of that new platform. And please contact us either on our helpline. You can phone us or email us if you have any specific questions around these Signia foreign global currency funds. But thank you very much for your time this morning.